Hey, I wanted to show a quick video on how to wrap up the end of the month engagement and do a little self-checking and make sure that we're giving the customer a good product. What I'd recommend doing with any engagement that you're just starting out is to pull up the engagement letter itself and review what it is we're doing for them. So this is the barking dog, and this up here is pretty much standard verbiage. It primarily indicates clarifying who the customer is and who's going to primarily take care of them. So that's how that section always works. The other key section that we customize is the what we will do section. This in here. So basically, our bookkeeping service is transactional based, so we need to get the transactions that go through the company on their credit card and bank statements primarily, but it can also be their point of sale system or their credit card merchant services account as well. Those are some of the key ones. And the most basic ones are going to be the credit cards and the checking accounts. So that's what it says here. We will enter the accounting information into QuickBooks. This includes the checks, deposits, transactions, including the estimates, invoices, credit memos. That section here isn't really relevant. It's part of the standard language. It includes entering payroll from the payroll reports. Very importantly, that it's from the payroll reports. We need to ask the client what payroll service they use and get those reports from them to post it. And probably the most important tenet of our service that we perform is the reconciliations of the banking and credit card statements, or the merchant services statements, or point of sale. So we will, and we mentioned that here about the point of sale system. So we do mention that here. They're going to be entered from their original documents and ledgers you provide. That just means that, hey, we're just processing what you give us. Next section of the engagement ledger is standard. This is standard, what we will need from you. We need them to provide us their bank registers, receipts, that sort of thing. Primarily, this is going to come in the form of the online banking information. Getting on down here, the fee for services and the scope of it is the next thing. So after you understand what we need to do, we can kind of go back to see what we have done in QuickBooks. And first thing that we always have to do is go make sure that this section here, which is replicated over here in transactions and banking, we want to make sure that all of these are posted and that the balances make sense. After that happens, the next thing to do is to reconcile. So we go to the gear, reconcile, and we want to reconcile those accounts so I can see that the business checking was done today for June, that the checking account was done today for June, and a savings account was done today for June. So once those reconciliations are in place, we would want to go over here to Insightly, to this project, update it with any notes we might have, clear our tasks off, saying that we did reconcile these items and that we got all of the items entered. Back to the books here. We need to do a little bit more though. As a CPA firm, I think one of the services that sets us apart is we're not just going to sit this out like this because we got these reconciliations done. That is the bare minimum. What we need to do at this point is go run the reports. And what I always recommend is to run the profit and loss. And if it's, as this month is for June, let's just run it for January through June. So I'm going to change that front date to January 1st through June, hitting the tab key to move among the fields. Then I'm going to go here to customize, and what I want to do is, I'm actually going to change the date here as well. I forgot that you have to do that in this version. I'm just going to change the date there to be from January through June. I want the columns, instead of it being the whole total from January to June, I want it to show me the total by month. And when you do that, you end up with a financial statement that you can analyze and look at very quickly and easily to see if there's anything out of whack. So, just looking at this one here, for example, I can see that the cost of beer and the cost of food is not right. So that's a significant drop off here. So that means that that didn't happen because their sales went up, and so that lets me know that I can't send this financial statement out because I got something wrong with it. So quickly analyzing the rest of these things here. Credit card processing fee, well, that's gone up because sales gone up. That makes sense. Dues and subscriptions, I don't know what that would be for them. Let's just see real quick. Per Sean. So, I don't know. Meals and entertainment. Again, I'm just scanning through here to see what's going on. I see another big change in the payroll. So that lets me know that something is up. Got to go look at that. Same thing in the rent. And taxes and licenses. That looks like it's kind of all over the place. It probably needs a general examination. And then we get down here to uncategorized expense. And what has happened here, I guarantee you, is this is a lot of what's missing up here. And that's how we do the review of that. After we look at this, the other thing to make very sure of and be comfortable with is the balance sheet. The balance sheet is what I always start out with to make sure that the P&L is right. Because if the balance sheet is correct, then the P&L has to be correct because it squeezes all up to the P&L. So we want to make sure that the bank balances look right. The one reason they could look wrong is if you have some duplicate transactions in there. It's possible to actually reconcile everything and clear those off, but you still have some uncleared transactions in there that would impact these ledger balances. This is the easiest place to see that. This is not correct, but it's not a big deal for right now. Going down here, their balance sheet is very, very simple. They have cash, some other assets, and that's it. And then they have some liabilities, and then they have equity because they've all been putting money into this thing and taking it out. That's what the negative means. So just reviewing primarily the top things here, making sure there's no negatives on the balance sheet, except down here, but this is fine. But negatives in the asset and liability means there's something wrong. There's something wrong here, definitely. We'll have to fix that. But in general, this looks pretty good. So that is sort of the review process that we will go through when taking on a new engagement and trying to figure out how to help a client.